Hello, in this lecture we're going to take a look at some shorter questions. These are types of questions that could easily be made into multiple choice questions for tests. So this is going to be a test taking type of review. They're going to be smaller questions, questions that are going to have less information that could then be made into multiple choice questions. We're not going to have multiple choices here. I'm not going to have a multiple list of choices. We're just going to work smaller problems that could be in that format. Now, you do want to learn some test taking skills in relation to multiple choice questions, so at a later time you probably want to look at something and just pick up some of those test taking skills that can help when looking at the multiple choice questions. Also want to let you know that I would recommend having something like a trial balance open or any type of cheat sheet that's available to you that you're able to have, like the book or something like that. For this example, I'm going to pull this to the side here, and we'll have, this is an example problem. So what it has here, basically the trial balance, and to me the trial balance is kind of the best cheat sheet to have, so we'll use that when applicable. It won't always be applicable, but I'd like to have it in front if it's available. Now, some of these problems are going to be better to be written by hand, and some of them are going to be worked in Excel would be better. Sometimes you're not going to have Excel, obviously, in front of you during the test-taking process. However, I do think working in an Excel could be useful in some ways, even if you have to work it somewhere else later. So if you have access to Excel, I would try to put stuff in there and get used to using those. If you need to do it by hand, then we'll do the same type of steps. You're just going to put it in by hand. All right, so let's start off here. We got purchase a parcel of land that was acquired by the seller for $100,000, is offered for sale for $180,000, is assessed for tax purposes at $110,000, is recognized by the purchaser as easily being worth $170,000 and is purchased for $167,000. The land should be recorded in the purchaser's books at. Okay, so this is just the question of what should we record this amount as. And you know, we are going to have an assessment, we are going to have the offer out there, but at the end of the day, we're going to put it on there for what we paid for it, which in this case is the $167,000. So that's just a matter of how are we going to put that on there? What part should we put it on there? Now, why should that be? Why would that be? That would be because that's assumed to be the market price. If we paid that, that's the market price. That's what we're going to put on the books. Now, just remember that it doesn't matter if we paid cash or if we paid it by a partial of a loan. We still paid that amount, whether it was from a loan or from cash. So there's that. Second question, we have a company balance sheet shows cash for $50,000, accounts receivable $30,000, office equipment $64,000, accounts payable $31,000. What is the amount of the owner's equity? So we're assuming those are the only amounts there. We got to figure out owner's equity. So we can think about this in terms of an accounting equation, and this is where it could be useful to have a trial balance over here. We have the trial balance over here, and I can see that, of course, cash is an asset because it's up here in the green area. Accounts receivable is an asset. Office equipment, also an asset up in the green area. Accounts payable is a liability. So the other amount then is going to be equity. So if we were to add up the assets, then if the assets, so I've input our accounting equation here. So there's our accounting equation, assets equal liabilities plus owner's equity. If I'm going to add up our assets now, so we had $50,000 of cash, we had $30,000 of office equipment, and we had, $30,000 of receivables and $64,000 of equipment. If we add those up, I'm going to equal the sum of all those. That adds up to the 144. On the liability side, all we had was the accounts payable, $31,000. And so here's our equation. Assets equal liabilities plus what? We're trying to find equity. That's, of course, the unknown. That's going to be X in this case. So in order to find X, then we're going to have to subtract the 31 from each side. So 31 from each side of the equal sign. Here's the equal sign. So this is our bit of algebra here. So we're subtracting 31,000, and that means that we are left with the 144 minus the 31. So obviously I did a plus there, but it's the 144 minus the 31, and it's a positive number in Excel when we add those up, because I entered this as a negative number. And of course, if we did the same thing over here, we would be left with just X. And then if we were to rewrite this, we would just say that equity, which equals X, equals the 113. So that means that equity's got to equal, if that's the only data we have, 113,000. So let's do a similar one to this one. We're going to say current year, the assets liabilities are as followed. Cash 2850, supplies 880, equipment 87, accounts payable 74. What is the amount of the equity? So once again, we're finding the equity. I'm going to go ahead and copy this equation again. We're going to use this equation, so I'm just going to copy that, which is another useful factor to have in Excel if you're able to use that. Same thing we're going to do. I'm going to just list out the cash, the liabilities, the equity, and then we'll solve for the missing component. So in this case, cash, as we can see by the trial balance over here, is an asset. So again, this trial balance doesn't relate to this problem, but having a trial balance there will list out some of the accounts and help us out in that way. So we got 28,050. Supplies, also an asset. It's up here in the assets. Note there isn't a supplies expense oftentimes, so you have to be careful. We're talking about supplies the asset, not supplies the expense here. 880. And then we have equipment. We know that that's an asset, so equipment is 87. And then we can take a look at the payable side of that. Well, we could sum this up. Let's equals the sum. This is just adding this up, of course. 2850 plus the 880 plus the 87. That will give us the 37,630. That's what we got for assets. Liabilities, we only have one number, so I'm going to put it down here. It's 7400. And so assets of that, liabilities 74, equity, that's the unknown. Let's just call it X. So now we have our equation here. Assets equal liabilities plus equity. We want to solve for X, of course. So we got to get rid of this 74 on both sides. I'm going to say minus 74 to make that go to 0. We will do the same thing with a negative 74 so that we do the same thing on the other side of the equal sign. So now I'm going to subtract these. Now in Excel it's going to be, I'm going to use a function. We're going to say a formula equals this 37,630, and I have to say plus in this case this number because I put it in there as a negative. So just be careful. I know what's going to happen here. Obviously I want it to go down. If I did the other way and if I put a minus here, then it would go the wrong way. I'd be 37 minus 7 made it go to 40. That doesn't make any sense, right? So what we want to do is having a plus, a negative. So we want to kind of get used to that. Same thing over here. We're going to say this is this number plus the negative. Okay, so that of course goes down to 0, and that's going to and then plus X. So we are basically left with then X being equity. Equity, remember that was X, equals, in this case, the 30,230. So that would be our answer. So now we're going to work another problem with the accounting equation. We're going to say if the liabilities of a business increase 97,000 during the period of time and the owner's equity in the business decreases by 41,000 during the same period, the assets of the business must have. So note we're talking about increases and decreases, but once again it's an accounting equation problem. So we'll just take our accounting equation up here. I'm just going to copy the accounting equation. We'll bring that down here. I'm going to paste that, and that's what we'll start with. And we know that, we don't know assets, I believe, but we do know that the liabilities increased 97,000, and the equity, they say, decreased. So it's plus a negative number, 41,000. So that's a little bit tricky to plug that in there. It's plus the decrease that's happening, and then the assets is going to be X. So note that if we have a a plus and a minus next to each other, I like to just rewrite that whenever I see that. That's going to say X equals 97,000, and a plus and a minus next to each other. Plus and minus is just a minus, really. So I can say this is equivalent to saying minus a positive 41,000, and then it's just a subtraction problem. So it was just a subtraction problem before, really, but we're going to say X then equals, I can say equals the 97,000 minus the 41,000, and that means it's the 56,000. We know what X was. It was assets. So assets then equal 56,000. So we purchased equipment on credit. So if we purchased equipment on credit, we can think about this basically two different ways. We're going to want to see the effect on the accounting equation. So we could think about journal entries. We could think about the accounting equation. Let's stick with the accounting equation here. So I'm just going to say we have our accounting equation, and there's two types of accounts that are going to be affected every time. So we purchased equipment. That means, and we purchased it for credit. So equipment is an asset. Again, our handy trial balance over here can tell us, that's an asset. We got more of it, so it must have gone up. So it went up by 4.9. If that went up by 49, then something has to have happened on the second side of the equal sign. And that means that the cash didn't go down, liabilities went up. So liabilities went up 49. No effect to equity. Equity stays the same. So the effect is an increase in cash and an increase in liabilities. Otherwise known as an increase in assets and an increase in liabilities. The assets being cash and some kind of loan payable. So now we'll take a look at another one with an accounting equation. Equity is $390,000 and liabilities are $198,000. Then assets equal. So what will assets equal? So once again, we got two of the three. So I'm gonna take our accounting equation here. We're just gonna copy that. We're gonna bring that down here, and they just gave us artificial categories here. So we're saying equity. I could plug that in over here. 390,000. Equity is that, and we know that liabilities. Oops. I was going to say plus, and we know that liabilities are 198,000, and therefore we don't know what the assets are. So that's X, and this is pretty straightforward. Once we plug it in there, we're going to say X then equals, and this equals the 198,000. They're both on the same side of the equal sign, so we can just add them up. 390,000. So we have X equals 588, and we know, of course, that assets are what X is. So assets then equal this 588,000. So if we take a look at this, another one of these, we're going to say that assets are 319,000, liabilities 190,000. Then what is equity? So once again, I just take our accounting equation here. We're going to say accounting equations here. We're going to paste that there, and we're just going to plug our numbers in here. Assets are 319,000 now. And that's going to equal liabilities of 190,000 plus equity, which is the unknown X. So now it's a little bit more difficult. We got to solve for X over here. And so we're going to have to do the same thing to both sides of the equal sign. We want to get rid of the liabilities in this case. So I'm going to subtract liabilities here. And one more zero there, one more zero. And we're going to have to do the same thing over here, negative 190,000. So then if we subtract that out, I'm going to say this is what assets were plus the negative. So remember, it's a subtraction problem, but I'm saying plus the negative for Excel. We know it's going to work because it's going to go down to 129. So that then equals, and of course, the 190 plus the negative 190 is 0. So 0 plus X, and therefore we know that X then, I'm just going to flip the direction, X then must equal the 129,000, and we know what X was. X was equity. Therefore, equity equals the 129,000. So let's take a look at another one. We got if assets are 89,000, liabilities are 27,800, then equity equals what? So I'm going to copy this equation again. We're going to say, okay, there's our equation again. We're going to plug this in there. We're going to paste that here. So we know that assets this time are 89,000. And we're going to say that equals liability. So now we know liability is 27,800. We don't know equity. So once again, equity are unknown. So our unknowns over here. So we got to get rid of this 27,800. Therefore, I'm going to subtract that on both sides so we can solve for X. So we're going to subtract it over here. I'm going to subtract it over here. So we can solve for X. Then we're going to say this equals this 89 plus the negative number, bringing it down to the 61,200. So that's what assets are now. Here's our equation now. This equals that. This liabilities are 27,800 plus the negative. That's why we did this, to bring it to 0. And then plus, we know that this is X. So basically, in essence, X equals 61,200. Gonna flip it. I'm just gonna say, well then X, let's put X on this side because that's how we like to read things. X equals 61,200. And therefore, we know that X is equity. So equity then equals the 61,200. So here's another one. The assets of the company are 714. The liabilities 207. What is total equity? All right, same thing here. So we're just going to copy this accounting equation, plug this in here. We're getting a lot of use to the accounting equation here. So now we know that assets are 714, and those equal liabilities of 207. And plus, and we don't know what equity is, so I'm going to say equity is X. Got to get X by itself, so I'm going to subtract the 207 from both sides to get rid of the liabilities. So 207, 207, both sides of the equal sign. Then I'm going to add those up. So this 714 plus the 207 to get rid of it brings it down to 507. That equals the liabilities of 207 plus the negative. So it's a subtraction problem. Bringing it to 0, that's why we did this, plus x, which is equity. So now equity plus zeros is just x equals the 507. We can rewrite this as x then equals the 507. And we know that x is equity equals the 507. So equity equals 507. So now we're going to take a look at some transactions. So we uses 1,340 of cash to purchase supplies. The effect on the accounting equation would be, okay, so we used cash to purchase supplies. So I'm going to take our accounting equation up here again, and we're going to try to record this transaction in terms of the accounting equation, just see what happens to the accounting equation. So if we used cash, we know that cash is an asset, where our handy dandy trial balance over here will tell us that. And then cash, that means the asset must have gone down. So the asset went down by 1,340 because it went down by cash. And we purchased supplies. Supplies also up here in the asset section. And notice it's really handy to have the trial balance here because it'll show you that. And also note that there might be a supplies expense on a trial balance. And you have to keep those two things separate. When we purchase it, we usually put it in a supplies, and then we expense it later as we use it, kind of like inventory. That's how we're going to learn. It's kind of like the intro to inventory. So this is a tricky one. This is kind of one of the more tricky ones because assets went up too. So what's the effect on assets? Well, it went up and down, and therefore there's no effect to any piece of the accounting equation. Nothing happened. So this is why debits and credits are actually better than the accounting equation, why we kind of have to use debits and credits, because this transaction doesn't even kind of show up in terms of increases and decreases in the accounting equation, even though something happened. We got one asset, we lost the other asset, no effect on the accounting equation. Next one, company paid off $32,000 of accounts payable in cash. So what is the effects of this transaction on the accounting equation? So once again, we're just going to take our accounting equation here and we're going to try to record this transaction in terms of change to the accounting equation. So we paid off, we paid something with cash. Therefore, cash is affected. We know that cash is our asset over here in our handy dandy trial balance. Therefore, it's an asset. And it went down. So I'm going to say the asset must have gone down by $32,000 cash. What would be the effect? And the other side is accounts payable. So accounts payable, so we paid off the accounts payable. Now, if we look over here, accounts payable is a liability. And if we paid it off, it's going down. And we can also see that it has to be going down because if it's a liability that's affected and assets went down, then liabilities has to go down in order for the assets to equal liabilities plus the owner's equity. So this must have gone down by $32,000 and therefore nothing happened to equity. So assets decreased and liabilities decreased. Next one says billed client for $30,000 of consulting work completed. The accounts receivable asset increases. So we have our accounting equation again. We have our accounting equation. We're going to record this transaction and see what happens in terms of the accounting equation. So we had client billed the client. So we did work and billed the client. So is cash affected? No, it's not affected. But we earned something, and therefore we did get an asset, and they told us what that asset is. In this case, they said it's accounts receivable. Accounts receivable is an asset. It represents the money that is owed to us because we earned it. And therefore, that asset's going to go up. So assets are going to go up by $30,000, even though we didn't get cash, because we got the receivable. And then why did we get the receivable? Because we earned it. So remember that cash and earning something are different. Cash is the payment. Earning something is different. It's earning revenue. And revenue is down here. We can call it revenue, we can call it income, we can call it sale, we can call it fees earned, we can call it consulting fees, whatever we want, but it's going to be down here in revenue. Revenue has a credit balance that always goes up as a credit. We'll talk about that later, I guess. But we know that revenue is going up, and revenue is part of equity. So when you think of the trial balance, remember that this is the equity section on the balance sheet. But the whole income statement, when we look at the trial balance, is really still part of this equity section. That's why it's still kind of blue. It's still blue down here. That's what the blue is going to. So this is all equity. So when we think about just the accounting equation, the whole income statement is packed into that accounting equation. Therefore, we're going to say that the equity increased by the $30,000 because revenue increased by $30,000. So that's what happened. Assets increased and equity increased in terms of the accounting equation. Next one, a company balance sheet shows cash 28,000, accounts receivable 34,000, equipment 58,000, equity 78,000. What is the amount of liabilities? So if these are all the other accounts and they gave us those accounts, then we should be able to figure out liabilities. So we're just going to take our accounting equation here. We're going to have one missing area. We'll have one missing factor, and whenever we only have one missing factor, we can find it. So we just need to plug these into our correct categories. So a company balance sheet has cash, asset up here in the green area, shown by the handy-dandy trial balance. So 28,000. We already knew that because we know cash is an asset. But accounts receivable, that's an asset too. It's up here in the same area, in the green area. So 34,000, also an asset. And then we have the equipment, also an asset up here in the asset area. So 58,000. And then we're looking at and equity. They just gave us the sum of equity. So I guess these are all the assets. So let's add those assets up and see how many assets we have. So I'm going to use the sum function, SUM of 28 plus 34 plus 58. That gives us the 120. Liabilities, we don't know. That's going to be X apparently. And we do know equity. They gave us equity 76,000. So they just gave us total equity. So now we have our same kind of issue of the unknown X here. So we got to find the unknown X, and that means we need to get rid of the 76. So we're going to subtract it on this side. I'm going to say negative 76,000 over here. And we're going to have to do the same thing on the other side of the equal, negative 76,000 over here. And then if we add this up, so here's our equation. This is the equation we're working on. We're just going to say this equals the 120 plus the 76, bringing us down. It's a subtraction problem. I'm using plus because it's a negative number in Excel here. So 120 minus 76, 44, equals X plus, and then we're going to say this, of course, is the 76,000 plus the 76,000, which is 0. So we, in essence, have X plus 0, which is just X, equals 44,000. We can rewrite that as X equals 44,000. Because we want to read it from left to right. And then we know that X is, what did we say, X was liabilities. Then equals 44,000, and that is that. Next one, we're going to say a company has assets of 610,000, liabilities 225,000, equity 355,000. It buys office equipment of credit of 80,000. What is the effects of this transaction on the accounting equation? Now this one's kind of tricky because they give you information we don't really need here. Like we have this information up top, and problems will do this from time to time, but it doesn't really isn't needed. So let me show you what I mean. We're gonna say here's our accounting equation, and we're gonna bring that down here. There's the accounting equation. Now we could plug this information in they gave us. We have 610 assets, and that equals liabilities of 22255. And plus equity of 355, and we know that's in balance because if I add these two up, I'm going to highlight those two. I'm going to look at my formula bar, task bar. That adds up to 610, which equals assets. So we're in balance. That's good. And then if we're going to do this transaction, then it doesn't really matter where we started from, as long as we started with something in balance. We're going to say it buys office equipment on credit. So office equipment I can see over here is an asset. So it's an asset, so we got more of it. I'm going to say 80,000 went up in the asset direction, equals, and we're going to say and the other side, we bought it on credit. So we didn't pay cash, we bought it probably accounts payable, liability. So liability went up by 80,000, no effect on equity. So what happened then? Well, assets went up and liabilities went up. We don't need to know these numbers up here. It doesn't matter. Now they could ask this problem in a different format and see what is the ending balance of assets, liabilities, and equity. And if they had asked that, which they didn't, all they asked this time was, what's the effect? Well, assets increase, liabilities increase. If they asked, what are the assets after this transaction, then it would be the 610 plus the 80. Would be assets, would equal the liabilities of 255 plus the 80 plus the 355 plus the 0, and now we're still in balance. So just be careful of the wording, because you might try to put the ending balances when they asked for the increase or decrease. They could ask it the other way. So it's just the wording of the question. Next one, we're going to say that the company had a beginning equity of 83,000, revenues 123, expenses 76, and withdrawals of 10. Calculate the equity. Now, this one is helpful to have the trial balance over here because the trial balance will show you all the equity sections in blue. So they basically listed out the equity section. I don't have a trial balance here that shows the draws, but if you had one that showed draws, it would be right in here. So we would just list these out kind of in the same order of this trial balance. Notice I have credits in terms here of revenue being a credit and expenses being debits. We're just going to use plus and minus over here. And so here's how it's going to go. So we got the beginning balance in the equity. This is before the period started of 83,000. If we were looking at a trial balance, that would usually be this number in the trial balance because it's the beginning balance before the activity of the income statement, revenue and expenses. So revenue and expenses, remember, is part of equity. So that's like what happened. That's like us measuring the clock in someone racing and seeing how they're doing. We're measuring how they did in terms of dollars in this case. So revenue went up by 123,000. That's going to increase how much is owed to the owner. And then expenses. Expenses are going to go down. So that's part of here. Expenses, I'm going to put them as a I'll just put negative 76,000. And draws aren't on here, but draws is what was pulled out. So this is what is owed to the owner. Withdraws. And if the owner took it out, then the company is going to decrease the amount that is owed to the owner. Remember that the equity is kind of like a liability. Notice they're both credit balances. This is what's represented as owed to somebody else. This is what's owed to the owner. If the owner took it out, that's going to go down. So, and again, this is liabilities and debits. We're talking about just plus and minus over here. So we know that it's going to go down by the 10-1. So that's, if we plug that into a calculator, then it would be the 83,000 plus the 123,000 minus the 76,000 minus the 10-1 to get our 119. I can just sum that up using our sum function over here because these are negative numbers. So if I sum this up, it's going to be this plus this minus this minus this because of Excel. So if I sum this up, it should be and 119.9.